how to set up a company. This video is going to be important for someone who's looking to set up a company or looking to refresh themselves onto the various roles, responsibilities, and the important things really required to run a company properly. All right, let's jump straight into it. We're going to be discussing 9 points. The first point is the structure. And with the first point, we're going to be discussing the liability of a company if it's an appropriate structure. We're going to be talking about funding, and finally the responsibilities of the various individuals or roles that occupy and form the company. The first one is limited liability. Well, the company is limited by the assets that are in there. For example, a creditor cannot reach out and grab personal assets of the directors or the shareholders unless there has been some kind of illegal activity, right? For example, insolvent trading, or there's been some kind of fraud within the organization that the directors should have known about or are personally responsible for, then the courts may potentially reach out, tear the veil of incorporation, and grab the assets of the members or maybe the directors. So that's the first one. The second thing is the appropriateness of the structure. There's various organizations, entities you can operate a business out of or invest from. You can operate as a company, you can operate as a family trust, also known as a discretionary trust. You can operate as a sole trader, or you can even operate under a trust, under a superannuation type entity, right? So there's all these various structures. You can also have a partnership, which is really a bunch of these type structures coming together to form that partnership. Funding can be gained fairly easily by issuing shares. You can also obtain loans by reaching out to your credit provider, your financial institution. But really, shares is one of the main ways that a business or a company generates equity, generates finance to initially start the business. The second thing we're going to move on to is the rules that operate the organization. And I'm talking about the very foundation, and that is in the form of the Constitution. The Constitution spells out how voting is to occur, when voting is to occur, when the directors should be holding meetings, how the directors will be elected, again, in the form of the voting, and also things like directors' responsibilities, okay? And also the financing, what type of shares, how will the financing be obtained? The third is the name of the organization. Now, you can have a company name that is separate to your business name. It's wise to consider what the company name will be. There are some company names that you can't choose. There's certain wording which might be inappropriate, okay? Or might relate to a government institution, which you can't use when you incorporate, when you register your company. But again, things that you should be keeping in mind is the market you're going to operate in, the services you'll be providing, and how memorable you want your company, your organization to be to your clients and the wider community. The fourth is the directors. You can't have a company without directors. What do the directors do? The directors operate the company on a day-to-day basis. Generally speaking, there's 2 types of directors. There's executive and non-executive directors. The executive directors operate the company on a day-to-day basis. The non-executive directors are not involved in making executive decisions. They're not operating the company from day to day. Why is that important? Why would you have a non-executive director on the board of directors? Well, because they do not operate the business on a day-to-day basis. they can potentially see things with a fresh perspective, a fresh look. Also, they are not restrained by the decisions that have been made by the executive directors, right? There's the ego is sort of put aside, and they're able to make decisions without going back and saying, oh, well, I made this decision. I'm going to look silly now if I might revoke that initial decision. The fifth important thing is the shareholders. The shareholders are important because they're the ones that finance the company initially. They can also be important because shareholders might have unique experiences which may influence the voting. What does that mean? They might say, I'm an investor and I know what the company should be doing. So therefore, I'm going to be choosing this particular director because I've had a look at their background and I know they understand and have the right experience to keep leading the organization. The shareholders can be either family members or they can be approached directly depending on whether the company is publicly listed on the Australian Stock Exchange or if it's a private company. A private company cannot reach out to the general public because it has not gone through the process of listing publicly. Okay. The next one is the place of business. Right now, this is where the company conducts its operations. Say if it's a factory, this is the place of business. The registered office is where the company may run the admin of the organization. Say, for example, they have an office in the CBD where all the communication goes, or where a vast amount of business is conducted, for example, meetings, so on and so forth. The next one is the share structure. There's various types of ways to generate funding in a company. One of those is ordinary shares. Another type is preference shares. Ordinary shares have voting rights. Preference shares generally don't have voting rights. However, they do have a preference as to when they get the dividend. They're usually first place to receive the dividends. And you can also have options. What are options? Options are really that. It's an option as to whether or not you obtain more shares in the future or whether you don't. Now, these options generally have an expiry date. The eighth is the various registrations. For example, GST, pay-as-you-go withholding, pay-as-you-go installments, superannuation, registering for an ABN so you can issue tax invoices with GST on them, and finally tax file number so you can complete your tax return at the end of the financial year. Lastly is number 9, which is a business plan. The business plan is important. You don't enter a game without having a plan, because that can lead to disaster. Okay. Now you can have a business, you can go without a business plan, but it's harder because when things get tough, it's easier to go back to a document you've previously prepared that spells out what you're going to do if a competitor comes to the market, or there's this or that legal issue. And it can contain things like reaching out to a business coach or reaching out to your accountant or legal advisor to really help you out. Now, I hope this video was useful to you. Feel free to reach out to me if you have any questions. Please subscribe to the channel, like the video, and press the notification so you receive videos as they come out and you can stay informed as to what we're releasing. Again, I hope this was useful to you, and we'll see you on the next video. Thanks for watching.